Hey, hi everyone. Welcome to Primary Market Chatter brought to you by Sunday Investing. This is our July second week IPOs edition. We thought of starting half an hour early today because this will be a long space because we have quite a few companies to cover. But then due to technical glitches, we are back like we are 10 minutes into it and we haven't started. But yeah, quickly starting before I actually start, just want to set up a few things that are regular housekeeping items. One, we are not SEBI registered research analyst. Whatever we say is not qualified opinion. Please do your own due diligence and only basis that take a call. We are wrong often. We have been wrong. We will probably be wrong in the future as well. What we are discussing here is just what we feel with respect to the companies. No way is it what will happen. Plus, we don't understand your situation. So definitely consult your uh, financial analyst, etc., and then take a call basis that. Second thing, if you haven't joined our YouTube channel, please go ahead and do that. Link is in the pinned comments. We are very close to 7,900 followers, subscribers there. So if you could help us reach there, that would be helpful. The idea is after every space, we kind of put it there, and then we also do a lot of promoter interactions, etc., which we put there. One thing we spoke with the promoter of Millworks, Mr. Acharya ji, whom we'll be putting tomorrow. So definitely follow the channel to hear about Millworks as well from the promoter directly. Then, in terms of the order for the day, we'll probably start with Happy Steels, then go to Laser Infra, then do Devson, then do Millworks, and then finally close with SBI Fund Management. So, a mix and match, not really all SMEs in once and then all main board, simply because the order could only be done that way. But yeah, we'll try and cover everything per se. Other than that, if you have any suggestions for us, please go ahead and put them in the chat box as well. And if you have any questions as well, definitely post them in the chat box as well. We'll kind of take questions. And if you can't hear us for some reason, please go ahead and join again. Like drop and join again should get better. Yeah, with that, let me set up Happy Steels. Incorporated in 1996, company is an integrated manufacturer of safety critical forged and machine transmission and driveline components, catering to on highway, off highway, electric vehicles, and defense applications. So, ये अपनी ड्राइव लाइन के जो कंपोनेंट्स होते हैं उनकी फोर्जिंग और मशीनिंग करती है कंपनी लुधियाना की कंपनी है इन टर्म्स ऑफ द आईपीओ setting up the IPO, it's a very small IPO, 25 crore IPO, all of which is a fresh issue. It's coming at a market cap of 94 crores. अगर FY 26 के फाइनेंशियल्स की बात करूं तो their top line was 96.5 crores. 100 crores का top line है, which is good. Bottom line was 7.1 crores. 7 का bottom line यानी लगभग लगभग 15 times पे 14 times पे कंपनी आ रही है. In terms of the LM is Share India and Master Capital Services. So over to you, Sachin, to talk about Happy Steels.
Am I audible?
Yep.
All right. So, Happy Steels, as it was already mentioned, that they make these driveline components, and they are doing it from the very start to the very finish. Like they are doing forging, etc. Also, they are doing heat treatment, precision machining. Also, they are doing cutting, etc. All of this they are doing in their own facility, and from start to end, they are making these components. So, कुछ components वो बना रहे हैं, like axle shaft. They are making that generally powers the engine to make those wheels run, so that your vehicle runs in. And some components they are making like spindles and brake shafts, etc. Some components they are also making for steering wheels, etc. So all of these components they are making for this for their OEM clients. And it takes around maybe 2 to 5 years to get into these OEM clients and get those certifications, etc., to come into their books and then generally start manufacturing. In their current revenue split, around 59% comes from these agriculture tractors, which are these off-highway vehicles, and the rest, 32 to 33% comes from these trucks and buses, which runs on those highways. And they have now slowly ventured into exports as well. Like from FY24, they have started exports, and now slowly they have ramped it up to around 18 to 19%. Some of the key customers are Ford Motors, Tafe, and Tata Motors, etc., Volvo Eicher, Escorts, etc. So these are some of the key customers, and they are one of the single suppliers for this Kubota and Cummins in some of the components that they mentioned. So that reduces the dependency on one of the customers for them. These guys are also related to one of the listed companies like Happy Forgings. So उनसे इनका relation है. I mean that Happy Forging is into upstream forging components, like they are doing it for larger peers. फिर उसमें वो axle carriers etc. करें. These guys are generally doing it for the OEMs and especially for these driveline parts. And so generally there is no, what you say, overlap between the products that Happy Forgings makes and Happy Steels makes. There is a family connection present, etc., but no such overlap and competition that is present between these two. Now coming to their financials, from 80 CR around in FY24, they have reached to around 95 CR in FY26. FY25 was a bad year for them. So some of the management changes and some export orders were hit for them. So because of that, the growth was not very much in FY25, and that spillover came into FY26, but not very much so. So that was the reason that you look at the top line, it remains flattish around from 80 to 94 CR. Margins in EBITDA terms have been around 14% in FY24, then the drop of FY25 to around 10%, and now finally in FY26 it has again ramped up to 16%. One thing on the PAT, that is bottom line, in FY24 there was a one-time sale of one of the lands for this company. So उसमें जो वो PAT है around 4.6 years, so that looks optically high. That was not present in FY24, so the margins got dropped. And when the business finally ramped up in FY26, so the PAT is grown to around 7 CR in FY26, but उसमें भी one of the around 1 CR का एक कुछ Keyman policy है. So if we normalize all of these things on FY26 basis, around 6 CR का इनका PAT है. So that we would generally consider for valuing it on TTM basis. This is mentioned in their RSP, and this was also mentioned in one of the interviews as well. Now coming to the IPO, from IPO they are using around 13 CR for increasing their capacity. They are adding some CNC machines, etc. And from some they have added already from their internals, and some they are adding from these IPO proceeds, etc. So they are looking to ramp up these forging and machining capacity to more than 50 to 60%. They are looking to ramp up, and they are saying that we would generally come live from in the last quarter of FY27, या maybe in FY21 के FY28 के फर्स्ट क्वार्टर में भी वो लाइव आ सकते हैं. They are saying that we already have one order book around 150 CR, and they say that ki the in this automotive OEM business generally 12 to 18 months का ही time span रहता है for these order books. So you can assume that they would likely complete these orders in the next 12 to 18 months. So that would be the forward guidance that we take forward. Now, some of the things that works well for Happy Steels is the exports are ramping as well. They have good partnerships with all of these companies, big MNC blue chip clients, Kubota, Cummins, etc. And the this facility is also coming in there, where they are expanding in their machining and forging components. Uh, their past earnings volatility is one factor. Like उसको आप normalize करोगे, then the price to earnings multiple will look somewhat optically high. Also, the business has some debt of around 45 CR. IPO say they are repaying around 4 CR, but it's not very enough. But they say that we would generally manage these from internals and whatever the cash business generates. So for now, that should not be a concern. But let's see how it goes going ahead. Also, they are mentioning that we are trying to enter into some defense and EV components, some artillery shells, etc. But that is not the primary focus of the business for now. So for now, we treat this as one of the that OEM ancillary business as well only. So उस basis पे if we try to value it, it is around 15 times on TTM FY26 basis, and whatever they are projecting, it could be around 11 10 to 11 times FY27. Peers में they have shown GNA Excels cross M4 को भी उन्होंने दिखाया. M4 I don't think is a right peer for them, but they have shown. But normally we see that in SME these guys generally trade around 18 to 20 times. These auto OEM business companies. So that would be the ideal range for these guys to trade. Lead manager is Share India. So okay-ish record. They have some hits and had some misses as well. So decent enough lead manager. Not very excited about them. Anchor Book was also okay. PSB fund was there. One new fund has come in, Securo Corp. So देखते हैं कैसा रहता है उनका. Probably their first anchor allocation in this IPO. And Science Star is also there. So they are known for their SMA anchor allocation. So for the final view, I think that business is good. Generally solid business ही है. OEM partnerships भी है. Decent export is also coming in. But that aggressive hunger you say to grow and to grow fast in that business. So वो I don't think is present now in this business. Also normalize करेंगे तो it's not very what you say cheap on TTM basis. So can be applied given that many issues are present around. So ये शायद skip हो जाए लोगों के mind से, तो this can be applied at once or decent enough listing purpose. That's all.
Got it. Thanks, Sachin. No, we had spoken with the promoter. We really liked some of the clarity in his mind. Like he said, his pet peeve was that everyone just asked about order book and what are you doing in defense. But it's a solid business in terms of what he's doing. Like Sachin said, growth is a slight concern for investors, but short term, I probably can get slightly re-rated, but long term growth will be a concern. Like because SME, there are so many SMEs that people tend to ship very fast, right? And there are better options available per se. So this will probably be slightly lower on my list as such. But yeah, that is with respect to the first company, um, Happy Steels. There's one question which is, are there any related party transactions with Happy Forging? How are they involved with them? But I think you already answered that those are
No,
slightly
no,
up in the.
no related party transactions. Both are separate business and both have different product lines. So no related party.
Got it. Perfect. Yeah. With that, moving forward, the second company we'll cover is Laser Power and Infra. Setting up Laser Power incorporated in 1988. Company is a Kolkata-based integrated manufacturer of power cables, conductors, and other specialized products and components to the power transmission and distribution industry. So पावर T&D में केबल्स वगैरह बनाती है. काफी कंपनीज आ चुकी हैं. इसकी सेगमेंट भी चल रहा है. अच्छा, ये भी आई है. So in terms of IPO, it's a 742 crore IPO, out of which 542 crore is fresh issue, 200 crore का OFS है. मार्केट कैप जिस पे कंपनी आ रही है वो 3004 करोड़ का है. FY26 फाइनेंशियल्स की बात करूँ तो 2348 टॉप लाइन है एंड 152 करोड़ बॉटम लाइन है. सो जस्ट आप डायरेक्ट देखोगे तो FY26 पे 20 टाइम्स है, बट देयर इज सम अदर इनकम एंगल इज प्रोबेबली तन्मय विल कवर व्हेन ही स्पीकिंग अबाउट इट. In terms of the LM is IIFL and ICICI Securities. So with that, over to you, Tanmay, to talk about laser power.
Am I audible?
Yeah.
So, Laser Power and Infra Limited is a Kolkata based integrated manufacturer of power cables, conductors, and specialized products for the power transmission and distribution industry. The company has also entered the EPC segment, in which they do projects into the power distribution, substations, and transmission segment. About the revenue breakup, 73% of the revenue comes from the manufacturing, which is your cables, conductors, and the allied products, and about 27% revenues are getting generated from the EPC. Now, the company is also one of the largest player in the eastern India in terms of manufacturing capacities of power cables and conductors, which stand at 85,448 metric tons per annum. Their manufacturing operations are supported by backward integration through in-house production of aluminum wire rods and PVC compounds. So basically, when you make these conductors and cables, especially the conductors, your the raw material. I won't say the raw material, but the first stage of conversion is your aluminum rods. So they have also done a backward integration, a few years back, and that is so they're one of the very few players with the whole backward integration coming. The company has entered into a strategic agreement with TS Conductor Corporation, which is an American globally renowned company for their transmission technology. Post the agreement, the laser power would be manufacturing conductors using TS Corp's advanced composite core technology. So the portfolio will be expanded into the AECC, HLTS, ECO, AL59, AAC, and ACSS conductors. Coming on the IPO size, the company is raising about 742 crores, out of which 542 crores is a fresh issue and 200 crore is an OFS done by the promoters. In the fresh issue, they are repaying about a 490 crore sort of a debt, and about rest 52 crores will go into the GCP. So earlier, the company was looking to raise, I guess, around 1100 crore, and but then they have reduced their issue size, pertaining the market sentiments. Coming on their financials, FY24 they did about 1,178 crore of a top line with a PAT of 40.4 crores, so about a 3.5% of sort of a PAT margin. FY25 they did about 2570 crore top line and about 106.8 crore PAT. Which was a very healthy growth over FY24. But in FY26 the revenue fell by around at 5% to 2326 crore, but the PAT jumped from 106.8 to 151.6. So in this 151.6 crore sort of a PAT, 32.8 crore was generated from an exceptional gain due to the sale of subsidiary. So if I just want to make it as an adjusted PAT, the number comes at around 118 or 119 crores of a PAT. So margins have been slightly again point 0.4, 40 bips, better, which was supported by the start of their, was ramping up of their capacities, and the capacities of aluminum rods also getting expanded. Now coming on their forward numbers, so like the management was asked about the numbers, and they have reported about, they have said ki we do expect around 20% plus CAGR coming forward, and we expect our revenues growing to 3,000 crores, in FY28. Sorry, 4,000 crores in FY29 was is what he was saying. So, but if I just consider, around a very pretty normalized growth for FY27 and around management guided FY28, numbers and the growth, the numbers go this way. FY27 they should do around 2750 to 2800 crore top line, which is around a 10% growth. But I do expect this to go up. But if I just compare it on FY26, the growth is around a 20%. And a PAT of around 180 to 200 crores. Now this jump in PAT margins from 120 to 180 to 200 should be viewed this way. They're repaying around a 490 crore debt, and they should save around a 35 38 crore annually. But if you just account for about a 6 or 8 months, the number comes to around 18 20 crores, because they also have got some short term debts which will have more spiked up interest costs in the H2. So that should save around a 20 22 odd crore is a fair assumption. Second thing is the capacity ramp up. So any capacity above 75 to 80% starts very high operational efficiencies, and I feel it is at that arc. So for 28 27 should see a lot of margin accretion coming in. Also, the backward integration will is now fully into the place. The even the EPC segment, which in which company operates, will see the captive conductors being used, which should save margins. Another thing they are doing is they're also installing power, this solar power plant, which should again reduce their electricity and power costs in FY28. So these are a couple of things. And also, so like FY28, I expect around 3200 3300 crore sort of a top line and around a 250 crore PAT. The PAT numbers should go exponential. Reason is pretty simple. The new technology of this, TS conductor should increase their gross margins by around 1.5%, and that whole 35-ish crore, 37-ish crore ka interest payment should come up, and their short term loans also should go. So this should lead to that sort of a margin. uh, Now coming on the multiples, the company is, coming at a market cap of about 3,003 crore, which is around a 25 times adjusted PAT FY26, around a 15 16 times FY27, and around a 12ish FY28. Uh, Now coming on the peer competitors, the company has shown about 4 or 5 companies as their peers. Few of like first would be Polycap, second one would be KEI, third they have shown is Dynamic Cables, fourth they have shown is Universal Cables. Now, if I want to talk on these four players, Polycab and KEI are less sort of a comparable. Reason is pretty simple. Not for that EPC portfolio. Polycab has got 10% revenues from the EPC segment, so that is not a point of concern. But Polycab has got its own brand name, and it's a B2C player, and Laser is basically a fully B2B player. But a good thing is there were sort of concerns on the working capital, and even actually the working capital and trade receivables haven't spiked up like anything in FY26. But the revenue split, if you just see, 50%, 55% is about a government revenue, which sometimes used to be that 70-80% mark. And rest is a private segment, and they are saying, the cycle should be more than normalized in FY27, and I'm assuming due to some sort of a government, the like elections coming up, that is all nonsense. We know, which has exactly happened in Rajasthan too. All the state governments delay the payments like anything when in the year of elections. Uh, that has led to that spiked up working capital cycle. Even in Bihar, the work has been pretty good for the company. That also segment is growing. Uh, Now coming on the valuation part, if you just compare these four players, so Polycab and KEI trade at about a 40 time, FY27 pat, 28 pat, sorry. And Dynamic and Universal trade at about a 15 time, 15 17, 15 16 time pat. Now I feel this company has the closest competition in terms of at least the qualitative factors to Dynamic, because they are into a similar sort of a product portfolio. I've even compared their conductors and cables, sort of a similar portfolio. And even I was pretty surprised. Even Conductor has done a tie up with Dynamic. So even that is a pretty comparable company. Even that company has a decent EPC portfolio, sort of a comparable. That company trades at about a 21 times FY26. And but the company is growing pretty slow, about a 10, 10, 12, 15, 14% sort of a growth. So I expect around a 14, 15 times, no, not 14, 15, but 15, 16 times FY28 on the PAT number. So this company, stands in a lot of tailwind as such. There are two things to it, three things to it. First, in the geography they operate, this company is actually the largest, but as I said, one of the largest. But I was looking at the numbers; they're the largest player in the West Bengal as a whole. And I'll give a number. There's a number to it. Ki how much bulbs are used in a kilo density population in a one kilometer. I'm not exactly saying you those words, but there's some sort of a number. In North and South India, the number stands at around 1700, 1800 odd bulbs. In Eastern India, it stands at about 500. Obviously, there is a inclusion of Northeast, which fairly has got a population scarcity as well. But if you just even look at West Bengal as a whole, that number stands at about 700. So I feel that is a number which should grow to around 11 1200 in maybe a 3 4 years down the line. So you can just see, if you just extrapolate the numbers, the power T and D substation segment in that geography should grow around a 2 to 2.5 times of the whole country's power T and D, capex outlay and the CAGR going forward, which should be around in the mid range of 20 to 25%, or in the worst case should be around 80%, 18%. So the second thing is the government change. I feel, post the government has changed in last 2 months. We're seeing a lot of schemes getting revived, and also new schemes getting developed, and also there are a lot of pending things which are coming up. So I feel that geography as a whole should see a lot of growth coming up from this segment, and as Laser being the top player, it is among in that tailwind. Coming on there, again, there are two more things which are very important to be discussed. There is another company which has already filed an IPO called as Lumino Industries. It is around a 1200 crore IPO. And if I just look at that company, the promoter group is same. Matlab, so there is a promoter family who is running the same business from two different entities. But even I was pretty negative when I read about it, but then I understood the nuance what exactly has happened. So there has been split in the family, and Lumino has been taken over by the same family but from a different promoter group, and Laser has been separated, and there were some inter-party that has came down from about a 20-30% to about a 2%. And Lumino's operations in Assam and Tamil Nadu is also being taken over by Laser, which would eventually reflect in the efficiencies. There is one more small point to it which I feel known is talking about, which I feel I don't understand what exactly is this. There is a entity called as Builders, which is a real estate company, which was demerged from Lumino in 2024, if I'm not wrong, and that has been included in Laser Power. So I was looking at things, so and there is a soft loan given to that entity, so you should also expect some sort of a real estate development happening in even Laser Power, and they also hold lands. So I don't know this is a positive or negative or how the things are going to ramp up, but this is a, I won't say a point of concern, but this is a point everyone should know ki, this is just currently it is a manufacturing plus EP segment. Even that small, a very baby, real estate portion is also going to come in maybe FY 28. I'm pretty sure about it. 3-4% वहां से revenue आना चाहिए जितना मैं समझ पा रहा हूँ. And they also hold land holdings. I don't know whether this is into laser or there's some other arrangement to it, but there is some land holding also at the group level in which Akshat operates. Uh, Another thing would be the anchor book. Very, very, very exponentially good anchor book. Extremely good quality names. So I wasn't expecting कि 3,000 के MCAP में ये सब नाम आ जाएंगे, but I'll say from start to the end there was not a single name which was average. It was a pretty good anchor book. Uh, Another thing would be, so like how do I view this as a company and how do I value this? I feel this should be valued at about a half of what KEI plus Polycap does at an average level, which is around a 40 times FY 28 PE. So this should easily trade at 20 times and around a 20% premium to Dynamic. Just because of the simple reason, around 1.5 times to 2x growth, the geography it operates, and the IPO coming up. And I feel this company can go to a different scale in maybe 3 or 5 years down the line. Reason is pretty simple. It's a market leader in its geography, and that a state as a whole is going through a lot of underdevelopment. And I feel that should get revived. Is what the expectation is, and even the promoter had said in the open interview, in a public interview, that we do expect a lot of inflows coming in, from that particular geography in which they are very strong at. सो आई फील लेजर पावर इज अ स्लैम डंक अप्लाई. मतलब इसको देखना नहीं है, बिल्कुल लगा देना है. I feel it is one of those companies which can do very well post listing and as well as can deliver a decent sort of a listing pop. Like I personally expect it to deliver a 15 or 20% sort of a pop, and also do very decently in the medium to long term, because I feel at around 12 13 times FY 27, around the 16-ish times FY 26, 16 times FY 27, around the 12 13 times FY 28, there is nothing much to lose. And if you just look at the numbers, management has said openly on CNBC, we expect 4,000 crore revenues in FY 29. If that sort of a numbers are realistic, even if they do 3,500, the numbers I have projected are pretty conservative. Because I'm showing about a 3,200, 3,300 in FY 28. So if that happens, the number should go crazy. And you should expect the company's current valuation at around 11 times, 11 and a half, 11.5 times FY 28 PAT. Uh, so it is an apply from my end. There is no second thought to it. A good company, good promoter. There is sort of this family split which has been sorted. I feel of sorted. Obviously there can be some issues, but at least जितना मैं settlement समझ पा रहा हूँ, it is pretty sorted. This Akshat is a small thing, positive, negative either ways. But currently it is zero. In 1.5 year, it should be about a 2, 3, 4% of the revenue. Is what is a fair assumption. uh, Good apply, good backing. I feel it should do well.
Got it. Thanks, Tanmay. Yeah, so this IPO is coming at an opportune time, right? Like when probably the first IPO from the state after the election and the government change, right? So maybe everybody is looking at it as a positive, and at the valuation doesn't seem to like price it high. They have left some space on the table. But how do you see the EPC piece? 30% is
23%.
EPC, right?
At
So
27%. Uh,
and will that change over time? Like,
So I was looking at
will
the
that
order book,
remain?
So like there is a 1 minute discussion here. So if you just split the order book, it is around a 3,200 crore order book, if I'm not wrong, out of which around 1,400 crore, 1,450 crore is an EPC, and rest 1,700, 1,800 crore is a conductor. If you just look optically, it looks about a 40-60%, but you need to also understand there are two things to it. First is there are very regular billings of the private sector, which are on demand. So generally उनका order book account होता नहीं, because that's sort of a regular delivery. तो उनका कोई billing होता, मतलब ऐसा order book में they don't consider कि the second part would be the captive thing. So I feel this 2773 can be 3070 down the line, but it shouldn't be beyond that range. And second part to it is actually the EPC segment is fairly margin accretive, because they do complex work. They don't do very normal rural electrification thing. They do fairly complex things, and also in-house conductors they have got. So I feel that is a margin accretive business actually. Obviously, it would stretch the working capital, but now company I feel is poised to get. And यार इसका मैं देख रहा था ना, वर्किंग कैपिटल 6-7% पे इसको लोन मिल जाता है, तो नॉट अ बिग बिग डील आई फील.
Got it. So if anything, that's positive, right? Simply
हाँ
because
करेक्ट
they
करेक्ट इज पॉजिटिव, बट
doing
वो
certain
27 का 30
portfolio.
भी होता है ना, इसका पूरे कंपनी का मार्जिन आधा आधा का बढ़ जाता है.
Got it. Understood. That's helpful. And the anchor book was also good from what I could see, right? Like all good
Pretty
news
solid
were
name
there.
for the market cap and the size of the company. And also,
Yeah.
earlier this was a 1100 crore IPO at around a 4500 crore valuation, 1150 ish kuch. Now they have came to 3000, which is a decent scope. Matlab.
Got it. That is with respect to laser. Please take your decision accordingly. I would probably be applying. With that, moving to the third company. The third company we'll cover is Devson Catalyst. Before that, if you haven't joined our YouTube channel or have joined the space in between, we'll also put the recording on our YouTube channel where you can listen to all of these reviews at your own leisure. So please follow the YouTube channel in from the pinned comments. With that, moving to the third company. Third company we'll cover is Devson Catalyst, setting it up. Companies are indigenous manufacturer of catalyst absorbents and ceramic balls used as a raw material in various industrial processes. So catalyst banati will try and understand what catalysts are and how they are used in industrial processes like hydrocarbons, etc. But in terms of the IPO, it's a 42 crore IPO, 39 crore fresh है, 3 crores का OFS है. मार्केट कैप 160 करोड़ पे कंपनी आ रही है. सो वही मिनिमम डाइल्यूशन है. FY26 फाइनेंशियल्स की बात करूँ तो 57 करोड़ का टॉप लाइन है, 12.5 करोड़ का बॉटम लाइन है. सो दे आर कमिंग एट लाइक 13 टाइम्स FY26, which seems decent. In terms of the LM is JJ IPO Advisors. So with that, over to you, Sachin, to talk about Dave's and Catalyst.
Am I audible?
Yeah.
Yeah. All right. So, Devson Catalyst probably is one of those few companies that have all of these what do you say products in their kitty. Be it the catalyst, be it this adsorbents, be it this ceramic balls. So, catalyst क्या है वो chemical reaction जो that is needed into the refineries. Like आपको crude से petrol and diesel and other products आपको what do you say, you have to derive these products from this raw crude. So उनके लिए catalyst is important, and absorbents also, so that helps remove these impurities from all of these chemicals that go into these different processes, be it for any industry, be it chemical industry, petrochemical industry, etc. And ceramic balls are usually small spheres, though जो वो जो रिफाइनरी है दे आर यूज टू प्रोटेक्ट दिस रिफाइनरीज एंड उनके जो इंटरनल वॉल्स एक्सेट्रा हैं, तो उनको प्रोटेक्ट करने के लिए दिस कंपोनेंट्स आर यूज. तो फॉर दिस देवसन कैटलिस्ट इट इज प्रॉब्ली one of the few that has all of this. So that is one thing with respect to what their moat is. Because if you see that what other players that generally have these all of these products into their package, that is mostly MNCs like Clariant, Honeywell का भी एक venture है वहाँ पे. There is BSF, Johnson Matthey, etc. So mostly this market is controlled by MNCs, and India generally imports around 2800 CR of this catalyst per year. So Devson is probably one of the few that is coming into this indigenization of this catalyst from India. Now coming to what, so I just explained what they actually do between this catalyst and absorbents and ceramic balls. Now coming to their utilization of capacity, they are utilizing around 87 to 90% of their capacity currently, and they are using some of the IPO proceeds to increase their facility this capacity. Currently, they are also exporting to around 20 plus countries. So that is one scope that comes in for Devson. So they can probably increase their clients overseas. Like they already have good relationship with the likes of BPCL, Reliance, Naira, from ADNOC, etc. In the Abu Dhabi and UAE, they also have good relations, and they are also venturing into these Saudi Arabian clients, Saudi Aramco, etc. So for all of them, they have got the approvals and they are slowly trying to ramp up this the export side of the business. Now there is a good entry barrier to why other players can't come in and what Desan is currently doing. So it usually takes around 3 to 5 years per product, or you can say per customized formulation that these catalysts are designed for. So उनके लिए there is substantial amount of time that is needed for approval, and these big players generally don't switch overnight. So if Devson has been with one of the few players, they generally go with Devson in the long run as well. So that is one advantage with Devson as well. So these are some of the few things that help to sustain their so-called moat in this industry. Now coming to the financials for Devson, and they have made till 55 CR in revenues by FY26 from 43 CR in FY24. So steady, decent jump in the revenues. Margins on the EBITDA level have been around 15% in FY24, and then the slowly capacity utilization and everything ramped up. So they have now close to around 27-28% in FY26. Similarly, PAT margin has also grown to around 22% in FY26. But here also there are some one-time gains in other income as well. So if you factor that in, around 20% is the sustainable PAT margin for this kind of business. They generally are not trading into any of these catalysts or absorbents, etc. But in FY24 5 they got one large order. So because of that, you if you look at that FY25 growth, in terms of revenue, it was decent, but some of the part was accrued to trading as well. And in FY26, since that trading component was not present, the revenue didn't grow much, but the bottom line was grew good enough because of this what do you say, operating leverage they got. तो वो उनको मिल गया, तो that was benefit why we see these good margins in FY26. And the management is saying that these are sustainable margins, so यहाँ पे कुछ issue आना नहीं चाहिए. Now coming to the IPO proceeds, apart from that OFS, they are using to ramp up their new facility. Around 18 CR they are using for capex, and they are increasing the this catalyst facility around 200 to 300 percentage, so more than 200 percentage you can say. So and ceramic balls में they are not trying to increase the capex, so उनके उसके लिए they have already done from internal accruals. So catalyst is the main capex that they are coming with, and they're saying that we have already tried to secure advance orders for the new facility that is coming in. So generally उनके लिए 5 to 6 months का that one backlog is present, or that timeline is present. So for that they are already started to pitch in clients, or वो सब they have already started to venture, and they are saying that we can fully utilize this capacity by FY28 to FY29. So that is the point when we can see that this Devson hit that 200 to 250 CR revenue mark if all goes well. So that is with respect to that new facility and IPO. Now coming to some of the risk, like these are PSU clients, so tender वगैरह Devson tries to pitch in, plus pricing pressure always remains in tenders. So वो एक slight issue हो सकता है. How fast and how in time this new facility will ramp up. So that is another issue with this Devson. Now coming to this valuation. In terms of valuation by if you look at FY26 on TTM basis, it's around 13 times. And if you just see what they are projecting for FY27, and maybe in FY28 they are projecting around 30-35% CAGR for every year. So on that basis it is below 10 times. So there is decent enough value. If we just look at Devson and if we try to value it along with some other big players, especially on the chemical companies that are being valued, so एक थोड़ा सा niche है with Devson. And if we put if we put in and to value this Devson around 20-22 times, so us basis pe there is a good amount of scope left for this Devson, uh, even on the IP price, and even if we factor in whatever the GMP is running in. So us basis pe the pricing is decent enough. And now coming to the lead manager, JJ IPO is their lead manager, and this is the first public mandate. So let's see how they do. Market maker is M&M Stockbroking. Anchor list was good. We saw India Max was there. Some of the new funds like Invecto Multiplier, Brescon. So these funds were also, and then some known names like Meru and Vijit. So decent enough anchor book, and actually better than what we see, what we saw in Happy Steels. So that is another factor that is in benefit to this Devson. So coming to the final view, I think that जो भी उनका FY 25 एंड FY 26 में जो भी स्टैग्नेशन था, so that is done away with. Facility is coming up, and FY 26 में जो भी ये इंडस्ट्री वॉर्स एंड वॉर एक्सेट्रा का जो भी डिसरप्शन था, that is gone away with. So उसका spill over should help in FY 27 as well. And they are these guys are one of the few players that is providing all of these three components into the package. So that valuation and that positive thing is also with them. So I think it's must apply on the IP price as well, and if you can get it decent when it actually lists, so from there also you can track it post listing. So that's all for Devson.
Got it. Thanks, Sachin. So I'll tell you, there's an TAM is very big, right? Like Catalyst used, it's a very big market, right? And most of it is
Imported.
imported from MNCs right now. So this is a company which is coming up, and there is a reluctance, inertia to switch once they have found a vendor in India,
Correct.
right? And Gem Portal has really helped them in order to find their backing. So that's a good thing about the company. The TAM is very big. So growing as such should not be super difficult for them, and they should be able to also hopefully protect their margins. Like protecting the margins is important, but at least it seems to be in the right place at the right time, where because of Indianization, a lot of these Indian refineries are buying from them, and they had mentioned that if you look at any refinery, they are our customer. So excited about this company. Somehow reminds me a bit about Monolithic, how like it's a SaaS product end of the day, right? Catalyst, you don't really like, it's such a small ticket item compared to the all the consumables that the company that any refinery would spend on, that once they have found a vendor, they'll not change, right?
Right.
So this company, because of that, should probably do well, is what I think.
Yeah, similar views, similar views. But even if the catalyst and etc., whatever they are producing, its value, like the per item value is very less, but it's such a necessary and what do you say, mandatory product to go into those refineries etc. So वो तो ऐड करेगा ही पे Epson.
And what is the split between catalyst and absorbents? Absorbents are rather like regular items, right? Catalyst are the ones which have very good margins, something like that, right? If I'm not
या
wrong.
कैटलिस्ट में ही इनका मतलब ज्यादा वो है. तो कैटलिस्ट एब्जॉर्बेंट्स यू कैन से अराउंड around 5 to 10% whatever they're producing. Then comes the ceramic balls, and Catalyst is their manufacturing part of the business, and that is the high margin bit. So उसी को they're slowly ramping up with new capex में भी वो लोग उसी पे ramp up कर.
Got it. Understood. With that is with respect to Devson. Maybe with that, now we'll move forward and talk about the fourth company. The fourth company we'll cover is Millworks Technologies. It's a hot SME IPO that is up. So before I actually set up the company, just want to highlight that we have also spoken with the management of Millworks, and we feel uh, it will help with respect to just understanding the business. We'll try and put it live tomorrow or day after on our YouTube channel. So if you haven't followed our YouTube channel, please go ahead and do that in the pinned comments. We'll put the management interaction of Millworks there. But let me set up the company. Incorporated in 2021, company specializes in the design, development, and production of high precision components and assemblies for the railway, aerospace, defense, metro, drone, and semiconductor industry. So a lot of hot names in there, and precision components. We'll try and understand. In terms of the IPO, it's a 160 crore IPO, very big SME IPO, all of which is a fresh issue. It's coming at a market cap of 583 crores. So around 600 crores का एम कैप है. FY 26 फाइनेंशियल्स की बात करूँ तो 153 crores का टॉप लाइन है, 37 crores का bottom line है. So very good PAT margins, like 24-25% PAT margins, which is not unheard of in this industry because of the tailwinds and how supply is so choked right now, constrained. But in terms of like it's coming at 15 times FY26. In terms of the LM is GYR Capital Advisors. So over to you, Rohit, to talk about Millworks Technologies.
Thanks, Manish. Uh, so as you mentioned, they are sitting at this confluence of so many buzzwords. So they are firstly a precision engineering company. So they make high precision machine components for sectors like aerospace, defense, railways, and semicon. Of this, railways has been their bread and butter. This is how they kind of scaled up when they started. But over the last few years, they have shifted that mix heavily towards defense and then aerospace. It's a very blurred line between defense and especially military aerospace. So they have also internally combined this as one segment. And they have a very small portion of others, which is also very interesting, but it's not a segment, or at least it showcases their capabilities, but it is not a not going to be very large for them for the moment. But I will touch on this as well. Now, when you come to precision CNC machining, it all comes down to tolerances at a micron level, and these guys can make their components up to like 5 to 10, with a tolerance of up to 5 to 10 micron. At these tolerances, literally the error sometimes comes just from the measuring of the micron. So if they have a certain error rate, that is often because the measuring was wrong and not because the product was faulty. So these are very difficult parts to make, and this is something that this is their specialization focus. Now, what is again interesting is who they supply to. They have amazing clients. This is they have all. I think they work with some 6 or 7 different teams within the or segments within HAL itself. They work with a whole host of Israeli defense companies, which is obviously in focus given what is happening in the Middle East. Elbit Systems, Israel Aerospace Industry. So a bunch of them. They work with a bunch of other railway, top railway companies as well, and they export to I think 15, 16 countries, many in obviously Israel, many European countries, and so on. The other interesting thing about this business, given that they're given their size and they're currently an SME, is that about 70% of their business is built to print, which is where the customer will give you the exact drawing and say, make this for me. Um, 30% of their business is built to spec, which is where the customer will just give you some specifications. You have to make the drawing, you have to design it, prototype it, and then you have to deliver it. So that means I've gone even deeper into the capability stream. So this is a very good sign. I'll come to a comparison with some of the other listed companies, but there aren't any SMEs that I think can claim this today. And this is a mix that they want to go, even more a 50-50 kind of mix for this over time. And this is something that will really help with margins. I mentioned that their business mix is about 65% aero defense, 30% railways, and 5% semiconductor. I'll just touch the semiconductor thing. The parts that they make here is for ASM Technologies, which is I think it's almost like a one of one company that makes the machines that make semiconductors. And they are the company that sells to like TSMC and all of these people globally. So even if they are selling a single component to an ASM Technologies, there is something in what these guys do that has got them, qualified for them. This is not a focus area. They've said that semicon is not a space they want to focus on for now. Aero defense is a much bigger, hotter theme for them. But I thought I'd just mention that. As per them, they expect aero defense to be 70-75% of their business, railways to be maybe 20% of their business, and semicon to be that low single digit going forward. Um, Now these guys have a very, very high margin. They operate at about 35-37% EBITDA margin, but it is not unusual in this segment because firstly, capabilities, the engineering capability, the kind of certifications and qualification that it takes to get here. You tend to have very high repeat business here. And they've also, as I mentioned, they also have a lot of this build to spec work. So I think these are not unreasonable kind of numbers. If I look at their numbers and what they say they can do for FY27. So FY26, they did about 150 odd crore, 150 something crore. They did about 37 crore PAT. The expectation is for them to maintain a very high pace of growth for FY27 also based on a couple of large, and this is based on a couple of interviews that they have done, based on a couple of key triggers that are coming for them in FY27. There is a large order that they're expecting, on the missile carrier assembly side for Elbit systems, which I think in the next 2-3 months they should know for sure they're getting it. I think they're undergoing trial orders currently, and this is a if this happens, this will be a I mean, this company will trade in some other range if this order comes, because this is like a 150 200 CR annual opportunity. Similarly, I think they have a large opportunity with HAL as well, which is on the fuselage side, which again could add 50 70 crore of revenue. So there are things to look forward to in this company from an execution where they are currently executing trial orders that could really transform how the market values this company. Uh, Today they have in terms of capacity, I think they're operating at a fairly high capacity. They have about 75 odd CNC machines, and they're operating, I think, 75-80% utilization, but they're going to be using the IPO funds to add I think 30 odd more CNC machines, and also a very specific type of controlled temperature facility, which will allow them to take that the micron tolerance from that 5 to 10 to the low single digits, like 2 3 micron kind of tolerance, which is what is needed if you want to get into servicing a Boeing or an Airbus, which is like probably the holy grail. Commercial aerospace is the holy grail for a lot of these people. So if they're able to set this up with the IPO capex and IPO funds, and deliver this, again, there's a lot of upside, at least the way the market is valuing this stuff today. Now, a few let's say, okay, let me say there are a bunch of questions that people have about this company when you just look at, say, their balance sheet, or if you look at certain things. I've been seeing on WhatsApp groups and stuff, there are some questions people have. I'll try and address them based on. So I have just, in interest of transparency, I have visited this company's facility as well, and I have seen the products and I've seen what they make. So I'm telling you from that perspective too. Uh, these guys. So the first question is on this related party transaction with this company called QuickPay, which is this drone startup company based in Noida that actually has a fairly large order book directly from the Ministry of Defense. It's a very young company, but they do have, I think, FY20. So their results are there, I think, till FY25. But in FY26, they, I think, started servicing a very large order of, I think, 200 drones. These are suicide drones. I've seen the product. I've actually seen the drones also in the facility. So the products are definitely real. They started delivering this in FY26. These guys also have some equity stake in this company. So it comes as it's a very small single digit percentage. So it comes as a related party transaction. But these guys are making some of the, components and doing some of the sub assemblies for this company. So that is why suddenly there is this, chunk of revenue that is coming from QuickPay. And the management actually expects that to continue, and they expect that to be a big tailwind for them over the next, year, and FY27, FY28, and maybe beyond as well. So that's one clarification that I wanted to mention. The second thing that looks like a red flag, and is, it actually is a red flag, but again, have to understand how the business works, is they have a crazy high receivable cycle right now. I think as of FY26, it is almost like 10 or 11 months. I don't remember the number, but it's very, very high. Again, this has a lot to do with two things. One is they did bill a lot of revenue in FY20, like right in March of this year. That money is not stuck, but it got delayed because of the war. A lot of these are Israeli clients, or it goes indirectly, whether it is directly with these Israeli clients or indirectly. Because of the war, a lot of that money was stuck. And as per the management in more recent interviews, they've said that a lot of that money started to come back. There will always be a high working capital cycle here when you deal with the government, like if you deal with HAL and so on. You've got to assume that this segment will have a high working capital cycle. But you will also see the kind of margins that they're seeing just because of that. So I feel both of these, like especially the receivable thing, is spiked a little too much because of this whole Israeli conflict. And these guys are trying to figure out ways. I think they're saying that any new order from Israel will come with a 30% advance. They're making sure the Israeli clients at least airlift their components so that there is no, further delay. Otherwise, these things, the receivables comes only after the product reaches the client. Once it reaches the client, then the receivable starts, or the timer starts ticking. But if these products are stuck now because Hormuz was closed and whatever, you can imagine why things have gotten delayed. So it is like it seems to be more of right here, right now kind of issue. Um, and one more thing I just mention is, which I don't know, something I just noticed, and I thought I'll again address it is these guys have so they've done about 37 crore PAT, of which about 4 odd CR is from other income. That other income is all forex gains, which is basically they build something at, let's say, $85, and then on March 31st, dollar is now 95 rupees. It's not 85 rupees to the dollar that time, and now it's 95 rupees. So you book that extra as a other income gain. Uh, so should you count that in your PE calculation or not? At least from all the other export-oriented precision manufacturing companies in the listed market, whether you look at Azad, you look at Omnitech, anyone who's got a high amount of exports, they all have this very high. If you see in March, they'll have this high other income, which is all because of this reason only. So and people are giving it 120, 100, whatever crazy P multiples. Nobody's subtracting that and doing the math. So don't bother about that. A company has done 37 PAT. This, I think the market will look at this as, it is coming at 15, 16, whatever, 15.7 times. Um, Now, in terms of peers, I think in SME, we just had a recent listing, which is a company that we ourselves, if I just put my other hat, RMS has backed, Apsis Aerocom. It is a very, very, very similar peer. There are some small differences, I would say. Apsis is probably even more, capable in terms of its engineering. They make even more, complex and niche parts. But conversely, these guys actually have gotten into sub-assemblies. They've gotten into some of these other segments also. They're into slightly higher volume, lower value, but the volume is also an advantage, which is why they've grown so fast. So I wouldn't really, I mean, I'd say Apps is a very good peer to compare with, and Apps is doing very well in the market. Even somebody like an OBSC Perfection, which is, I'm just looking at SME peers. OBSC has also done well. Again, precision machining, not even in aerospace, or just barely getting into aerospace. And maybe that whole Tesla story or whatever, but that is also trading at like 60p. This is a segment in Mainboard SME that without fail trades at a very high multiple because there is a very high moat and a high barrier to entry. It takes a lot of time to build this business, and then suddenly you can grow very fast. And all of these guys are promising very good growth. So I am obviously, I mean, you don't even have to think from an application of the IPO. You're getting an aerospace precision component manufacturer making, with the best of the best clients and making very, very difficult to manufacture parts, growing at an insane speed at 15 times. It is, pardon me, but it's just looting the promoter, honestly, for whatever reason it has come at this price. It is great for any investor who gets this allocation. The main risk is just watch for the receivables. He's promised in some interviews that especially by July, August, a lot of the receivables will come knocking, and anything that doesn't is mostly just government. Just the kind of receivables that will come, just maybe delayed, but will come, and that's why you kind of need working capital. So I, fully, if I had to predict, again, none of this is a recommendation, but if I had to predict, this stock will hit a very, I mean, it could triple in no time. From the IPO price, it can do more than that also. There's every chance it'll go even beyond that. The stock probably deserves to trade at those multiples, and then it will settle at a fairly high multiple, and then, execution will come in. But I think this is a gem. Very good, very decent promoter also, at least from what we spoke and we met. Uh, so yeah, I think if there are any questions, Manish, anyone, please, or anything in the chats, let me know if I've missed anything. But yeah, it's a fairly obvious apply, and don't sell on listing at 90% also.
Thanks, Rohit. Not much questions. You have kind of covered the company. Should be applied. We'll see. One question that the company seems to be bringing IPO when their revenue has really shorted up and their revenue is bound to drop mostly by 30-40%. But I didn't see anything why the revenue will drop, right?
No,
Like,
no, their revenue will not drop. They already, I think, have an currently unexecuted order book for this year of some 150 crore, which has to be delivered in this FY itself. And this is as of now, June. And then I told you there are those other orders of, I think, 200 CR. If it comes, of course, that is a TBD. The Israeli order for those missile carrier systems. There is the HAL stuff. So there's enough visibility, I think, for them to do 200 plus. 220, 250, anything is possible. And I believe so. Again, just a small thing. When we had spoken to them last year, I think he was internally looking at well north of 250. But of course, the IPO has been delayed. Working capital is a very big driver of growth for him. So I don't expect that much. But I think he should do 220 to 250 if things go well. So I think the market will also assume that there's enough visibility for him to do 200 plus for sure.
Got it. And how is his technical capability, like the machines that he has, etc.? Are those like 5 axis CNC machines, etc.? How do you
So
look
if
at
I'm not
that?
mistaken, majority are 3 axis. Yes, some 4 axis and 5 axis. So that's where I mentioned that the intricacy of the parts that he makes. Like you see his facility and Apsys' facility, which is say a privilege I've had. Apsys will definitely be making even more complex parts. Like when you look at the part, you will realize, wow, this is how has a machine manufactured these parts. Whereas if you see Millworks, he's actually got a much wider range of products. Like you'll see so many different components, right? Like from say landing systems to like different parts of landing systems to different parts of say the wing and the fuselage. Like there's so many different pieces that he makes. So that's his strength. The strength is not necessarily in making the most complex parts, which maybe have its own challenges and its own advantages. His this thing is okay. I don't make those parts. Leave that to somebody like an Apsis. But I have my own niche where I do really well. So I don't think it is a problem or anything. It's just a slightly different way to approach the same industry. What he makes ultimately, given that he has those clients and those certifications and those relationships and repeat orders and all, that is the testament to what he's built in my view.
Got it.
Hello.
Perfect. Yeah, with that, we have covered
I would like to
Millers.
put in two sort of a concerns which investors have, and I just saw a social media post on Millworks, on a negative end. So there are two concerns, which I would like to address because I took an interview about today afternoon, so I pretty know the answers, and that is also going to public very soon. So the one of that concern is the working capital, thing, and the trade receivable part. So, if you just look at the DRHP numbers and the RHP numbers, and DRHP the numbers are given for about 10 months, and in RHP it is for 12 months. If you just look at that 2 months, that 2 months have been 40 to 45% of the whole revenue, year's revenue, annual revenue. So, you can just think कि जो billing आपका फरवरी मार्च में हुआ है उसका पैसा आने में टाइम लगेगा which is around 8 months out of a cycle, and it should get extended by another 30 to 45 days due to the issues with the shipments, and there are two good things to it. Is first, now company has been on that track ki whatever parts we're going to make, that should compulsorily go through the air route, which has been already implemented, and which he has spoken it very explicitly. The second part is now obviously Rohit has covered that 30% is going to be paid upfront by especially the Israeli and few European railway companies, which is I guess Alstom. So this should actually improve things, and I feel he also said it clearly. This month end we have seen a lot of no cash getting flowed. Which is the most concerning thing, is about quick pay. I guess about 40-45% of the revenues come from that single entity, which is pretty small, and people are saying कैसे हो सकता है. Actually they have got some cross equity investment in that company as well, so that given some debt to quick pay, and now that has been converted to equity, and actually also had a I won't say a pre IPO round, but a funding round about 2 months back. So that company has bagged around a 200-ish crore sort of a government Ministry of Defense order on the drones, and also they're likely to win one more. So this company Millworks, is combining their machining capabilities with that company, and then that things are going forward. And he's saying that should have around 9-10 months sort of a cycle. So that is one thing. And I had a question key, quick pay is pretty small. How do you see the things getting capitalized on that end? Because that company doesn't have that sort of a balance sheet to pay that sort of a revenue. Matlab 47% for about this year's turnover is pretty high. Matlab, but they are saying कि बोले उसका cycle 6 या 7 महीने का, and we should receive about a 45 days about the cycle. We should receive the money, and also there are some MSME rules, so they have to pay it. So I feel these are two pretty large concerns which everyone is having, and I'm seeing some social media posts making all this highlights. So I feel those are need to be highlighted.
Got it. Yep, those were covered. But yeah, I think at least at IPO price, there is absolutely
Correct,
nothing to
correct,
think.
correct.
Like, can be thought about. All these issues can be thought about after applying for IPO, and then you can probably think कि क्या करना है. But yeah, there's not a lot to lose at IPO price, right? With that, we'll move forward and talk about one last company before I actually start SBI Funds Management. Again, want to highlight that if you haven't followed our YouTube channel, please go ahead and follow it. We'll post the interview of Millworks as well there. With that, moving forward, talking about one last company, SBI Funds Management, and it's a company which everybody probably wants to listen. Setting up the company, established in 1922, it is the largest AMC in India based on AUM. So जो mutual funds वगैरह हम लेते हैं, so SBI is a known player in that. It manages the well-known SBI mutual fund and is a joint venture between State Bank of India and Amundi. So ये है company. In terms of the IPO, it's a 9,813 crore IPO, all of which is a OFS. लगभग 10,000 करोड़ का है. Was bigger, but then they did a pre-IPO as well of around 1,800 crores. Market cap जिस पे कंपनी आ रही है वो 1,17,000 crores है. In terms of the financials, crazy operating leverage, which could be understood for AMC. 5,000 crores का top line है, 3,000 crores का PAT है, insane 60% PAT margins, which is just brilliant. But yeah, 3,000 पे 1,17,000 PAT, so it's coming at like 39 times. We'll try and understand where to place it. But it would be a large cap on day one, probably, the way it is going. In terms of LM, the LM is Kotak, Axis, BofA, HSBC, ICICI, Jefferies, GM, Motilal, SBI caps. So, with that, over to Tanmay to talk about
Yeah, I'm audible.
SBI Fund Management. Yeah.
So I feel I would like to touch all the pointers and look like to break down the company, and I feel it should be a decently large discussion we should have for SBI Funds Management. So SBI Funds Management Limited, popularly known as SBI Mutual Fund or SBI AMC, was established in 1987, which was India's first mutual fund after Unit Trust of India. In 2004, they did a JV with Society General, where Society General took 37% stake. In 2011, Amundi, which is based out of France, Europe's largest fund manager, and the AMC had taken over that 37% stake of Society General and continued that JV. The SBI MF is the largest asset management company by quarterly average asset under management, which you also popular term as QAAUM, which has got an QAUM of about 12.51 lakh crores and a mutual fund market share of about 15.3%. Their QAAUM CAGR for between FY24 to FY26 has been around 14.2%, and their mutual fund quarterly AUM CAGR has been around 17%. The company has got a customer base of about 1.8 crore. All are the unique customers. About this I'll come at a later point. इसमें एक छोटा सा और एक point आएगा. The company has got about 128 schemes across equity, debt, arbitrage, ETFs, index funds, overseas funds, liquid overnight schemes. The company has got strong distribution with about 1.3 lakh distributors, and also a very good distribution in the Middle East, due to the global distribution capabilities of Amazon. SBI Mutual Fund is a leader in systematic investment plans (SIPs) in India by number of live SIPs, uh, SIP accounts with a market share of 11.4%. SBI is also India's largest PMS portfolio management services provider with around 39.8% market share in the country. In this PMS, they have got a pretty large overseas AUM of about 5 lakh crore. Oh, sorry, $5 billion. The company is also the largest systematic investment platform with an AUM of around 30 billion, which is about a 28.5% market share in the SIF segment. The very good thing about the company is their operating expense ratio, which is uh, what can be said is कि आपने कितना खर्चा किया in terms of your overall AUM, what are your expenses. So their expense ratio as a percentage of their gross AUM stands at about 0.08%, which is lowest in the industry. And if you just look at the top 10 players, the range is between 0.10 to 0.18. So they have been fairly, conservative on their expenses. Company has delivered a revenue CAGR growth of 27.7% between FY24 to FY26. Now, these are very basic details which I have provided. Now, let's understand how exactly SBI Mutual Fund makes money. This is the space where I feel the thing should get more clearer. So, first is how do they make money? So, द कंपनी चार्जेस अ मैनेजमेंट फी, उसको पहले एक्सपेंस रेशो बोलते हैं, उसके बाद फिर मैनेजमेंट फी करके कॉन्सेप्ट आता है. सो बेसिकली मैनेजमेंट फी इज बीइंग चार्ज ऑन द इन्वेस्टमेंट विच वी एंड यू मेक इन टर्म्स ऑफ एसआईपीस. अभी कौन से किस तरह के एसआईपी में कितना इनका रेवेन्यू जनरेट होता है, हाउ डू दी डेट ओरिएंटेड फंड्स मेक द मनी, हाउ do the index funds make money. I'll be breaking it down. So 96% of companies operating revenue comes from the management fee as a whole. Their whole AUM, of the company stands at about 29.5 lakh crore. Out of which now I'll be breaking it into four things. First is the mutual fund. Mutual fund contributes to around 42.5% of the whole AUM, which is about a 12.5 lakh crore. The second, so MF will also get broken down after a later point. There's a second segment which is called as PMS and advisor, which is about 57% of the whole AUM, which is about 16.9 lakh crore, which constitutes the international AUM and also the institutional PMS services. The third segment I've got is an alternative investment fund, which is also called as AIF. That book is around 6,500, 6,600 crores, which is around 0.2% of the AUM. And there is fourth segment called as offshore schemes, which has got an AUM of barely 640 crores, which is around 0.02% of their whole AUM. So if you just look at these four segments, the bread and butter come for SBI mutual fund, and especially the management fee comes from that mutual fund as a segment. अब म्यूचुअल फंड का चार सेगमेंट है, so I'll be breaking it down into four things. First is the active mutual fund, which is around 8.45 lakh crore ka book, which is where the company makes most of the money. What is an active mutual fund? A normal apna small cap mid cap fund hota hai, all this dynamic allocation, all these things in which we investors invest, is what is their bread and butter is. The second segment I've got is passive, which is a very very low yielding thing, which has got an AUM of about 4 lakh crores. There's a third thing called as equity oriented, which is around a 5.8 lakh crore, which is your SIF segment. The fourth is called as fixed income, and fifth is called as liquid overnight. So this is both 1.5 to 1%. So their mutual fund is a high yielding business, and in that specifically the active mutual fund has got a very great yield. Now you need to understand why this has got, because in an active mutual fund the fund manager has to continuously monitor things and also act upon the market condition and change his portfolios and also invest the new money. So this is where the company makes most of the money. Now, one thing which is pretty unique in SBI mutual fund is the other peers, be it ICICI or HDFC, have got barely any book in terms of the international PMS or the corporate book, and also their share of index funds as a whole is pretty lesser than what SBI has, which actually is a negative. Uh, but you need to understand this equity AUM, equity AUM CAGR has been around of 32%, which is actually the highest in the industry. So the shift of equity active mutual fund AUM as a whole is growing very good for the company. Uh, there's one more now coming on that, one small pointer of their customers. Out of that 1.8 crore individual unique customers, around 1.62 crore are the live SIPs, which generate around a 4,000 crore cash flow. I won't say cash flow, but an AUM generation to per month. Per month is this number. This is a clear cash flow. And out of that 1.6 to 1.59 crore SIPs are getting continued for more than 36 to 37 months. So you need to understand कि अगर मेरा 1.8 crore का पूरा unique customers है which are live, out of that 1.59 have been invested in SBI AMC from about more than 3 years, and those SIPs are continuing live SIPs. So I feel this is a clear cash flow machine, and this is one of the very rare numbers you would find globally. 1.6 crore active policies is not a small number at all. अभी मैं इसके आईपीओ पे आता हूँ. द कंपनी इज रेजिंग 9,795 crore from the IPO, which is a fully offer for sale. So this IPO was earlier supposed to be around a 11,700 crore sort of a raise. But the company has concluded around a 1,900 crore pre-IPO placement, in which we saw the top family offices and very great set of individuals coming in, investors coming in that list. I'll be talking on the financials, then I'll be comparing the valuation, then I'll finally come down to the growth drivers going forward. FY24, their AUM was 22.6 lakh crores, which grew to 26.3 lakh crores in FY25 and about 29.5 lakh crore in FY26. The revenue growth has been around a 20% sort of a CAGR, which moved from 3,426 crore to about 4,976 crore. So around the 5,000 crore. 3400 से 5,000 crore 2 साल में गए. So FY25 the revenue growth was around 23.6%. In FY26 it was about a 17.5% growth. The EBITDA margins grew from about 79.4% to 81.6%, which is one of the highest in the industry. The PAT grew from about 2,073 crores to about 3,067 crore, and the PAT margins grew from 60.5% to 61.6%. अभी मैं इसके वैल्यूएशंस पे आता हूँ. सो 1,17,000 करोड़ के मार्केट कैप पे कंपनी आ रहा है. सो टॉकिंग ऑन द पी पार्ट, the SBI AMC is valued at 38.1 times FY26 PAT. ICICI Prudential currently is at 49 times. SDFC is valued at 41.4 times, where Nippon is valued at 51 times. Talking on the earnings PAT CAGR, SBI has been at 32% CAGR, ICICI has been 30%, SDFC has been 26%, Nippon has been 28%. So even being the largest player in the industry, they have outperformed their smaller to relatively smaller to very small players. Now, you need to understand the growth drivers going forward. I'll then come on the forward numbers. The one super important या फिर interesting thing you need to notice, only 2% of SBI Bank's customers serve as also the investors in the SBI mutual fund through the banking channel, which is actually around a 5 to 10x for ICICI Prudential. And this is a very small number, 2%. And management was asking what is barring you from taking that number to a different level. So there are two things to it. First is the CKYC thing. So government of India and all the related institutions are working on bringing a one nation one QIC sort of a thing, in which for going into the mutual funds you need not do one more KYC, which will actually streamline and also expand the overall investor base as a whole. The company is also expecting this number to shift and grow at a very, very healthy CAGR. I know from that 2% going to some low double digits in another 3 years is what they're expecting. Their SIB book is growing like anything. Currently, it stands at around an active SIP book of around 6 lakh crore. And that company, so the management on CNBC had said ki FY27 should see that number growing by around a 40% to about, but they are saying 2 से 2.5 लाख करोड़ हमारा FY27 में बढ़ जाएगा. So that whole book should go from 6 to around 8 to 8.5, which is so this is a cash cow business, a pretty high yielding sort of AUM. This should add lot of margin accretion coming ahead. Their equity book went from 32% to 42% between FY24 to FY26, which is expected to go about 50% plus in this and next financial year. Now there is a pretty good concern about this company, which many of the investors are saying that this should be relatively valued lower to what ICICI and SDFC does, which is the management fee, which is around pretty less. So like industry was at about 0.45 40 to 0.45% as an AUM as a management fee, and this company stands at about 0.3% about. So management has clearly said we expect our yields to go the lower band of what the top five highest yield maker AMCs do, which includes the small AMCs as well. So if this number of 0.30 goes to around 0.38 to 0.40 and 0.36, you should expect the PAT of this company for next 3 years growing at about a 30% CAGR very, very easily. If this number holds true. Now, talking on the multiples, I saw, like, obviously I'm not going to take you down in that different sort of a multiples. मैं own peg growth and वो सारा फिर बाद में, like, in my written post I'll be commenting. So ICICI is trading at around a 30 times FY28 PAT. SDFC is trading at exactly the same multiple, 30 times PAT. Nippon is trading at 35 times FY28 PAT. So first thing which I feel stands out for SBI funds management is the global partner. Just look at what Aberdeen is doing, who is the JV partner of HDFC, and also Prudential, which is the JV partner of ICICI. These both are revaluing their global investments, and we have already witnessed almost half a dozen investments of Prudential globally getting revalued and getting shifted. So even there was a overhang for ICICI Prudential Life Insurance, which is a public thing. There's nothing new I'm saying about, and which is actually led. So the day there was a global revaluation done by Prudential, and from that day till today, ICICI Prudential stock has fallen by about 10-15%. There's been some sort of a devaluation there. Even for Aberdeen, it is. They have done it for three places, two in Europe and one at some different geography. So Amundi has never done this. They don't exit what they enter, and clearly the management has said that the next sale of stake in next 3 years is going to be purely from SBI, and Aberdeen is not going to sell anything. Is what clearly being said by the global head of Amundi Asset Management. Uh, so I feel this itself tells you that there is no sort of an overhang coming in. Now just look at what Prudential is doing. Yeah, Prudential sold their stake in one of the ICICI venture and also now partnering with Bharti. To clearly see the JV partner partnering with the competitor, which is actually going to hit you in the longer term for sure. So this is one segment, and especially AMC is actually a more I would say a different sort of a business where you don't want your partner to stand as a competition in the longer term. So, if you just look at what SBI is being valued, I feel even if I consider around a 26-27% CAGR, which management expects to about 30 to 30 से लेके 32% का CAGR management is expecting, even if I consider 27 to 28%, the PAT goes from about 33,070 crores in FY26 to around a 4,800 to 5,000 crores, which is actually quite a very good number, which is around a 24 times FY28. And I personally feel the AMC segment in India itself should be traded at more better multiples. Even I feel ICICI Prudential, HDFC are decently undervalued. So if I consider all these companies getting placed at around the 35 time mark, there is a very large headroom for gains coming forward. So what I personally feel is, it has been priced at 1.17 lakh crore sort of a market cap. If I value this at around a 30 times, which is exactly at what peers trade, there is a clear listing scope of around 25%, which is 1.5 lakh crore, which I feel should be a benchmark for this company. And also I do expect this stock being in that sort of a crazy run even post listing, because just look at the numbers. FY28 should easily have that 4,800 to 5,000 crore sort of a PAT. And there's one more very interesting number which management I feel has unfortunately given to us, which they were not supposed to. Mr. Singh has said that company has seen a growth of around 13% in first 4 months itself. They have clearly said that in that CNBC or Money Control, either of the two interviews. That's in gross growth, which I feel we just annualize it is around a 40%, 40.5% growth, which is terribly good. Uh, I feel if these numbers are coming in for FY27, the stock is going to read it like anything. And I feel if I consider this sort of a number, this company should stand at around a 2 lakh crore market cap in around a 12-month horizon, 12 to 18-month horizon, 12 to 15 months. So it's a clear no-brainer full force supply from my end. I expect this company to sit on that 1.5 lakh crore market cap on day one. Day one, I do expect, you know, and in the longer term, I expect that number to be in that 2 lakh crore horizon. And in 18 months, I would not be surprised if this stock doubles from the IPO price. Coming on few other things, you need to think about SBI AMC in a different manner. Is this is a one company getting listed? I don't feel Indian market seeing such an IPO in next 5 to 10 years down the line. There is no second SBI AMC or very large AMC yet to get listed. You won't say there's Mire, which is obviously pretty small to what SBI is, and there is no much larger fund manager who is left in India getting listed. I feel this is a one of one sort of a listing, not even in India, but actually in Asia. So I feel this should be a super duper institutionally hot favorite stock from all the global investors, hedge funds, and all the Indian mutual funds, ultra HNI. So there's a clear upline. I feel this stock has a potential to double from IPO price in next 18 months. And I do expect very healthy listing gains in it.
Got it. Thanks, Tanmay. When you said 28 to 30 times forward is underrated, somewhere Ben Graham in his grave turned
But this is at
looking at
23
30
times,
times
peers are at
forward.
30 times. So
No, you said the whole industry at 30 times is
correct,
underrated,
correct.
like
Yeah, yeah,
undervalued,
yeah.
right?
I stick to that statement. Yeah. I'll just give you one. I'll give
30
you one
times
number. I'll give
forward.
one number. So that should fairly put a clarity. In India, the unique SIP investors stand at about 6 crore. Okay, and around 25%. So this is a sort of different number. I'll come that at a later point. I feel 6 crore. If you just look at the families who invest, so in India there are around 30 crore families. Then that number in India is about who have invested in the stock market stands at around 1.5 crore, man. So this number is going to go 10x in next 10 years. I would say less than that. So India is the only market in the world which is insanely underpenetrated in terms of what AUM India has got, what AUM as a percentage of GDP India has got. US stands at 150%, we are at 25%. Not even 25, around 23.5%, if I'm not wrong. China is at around, I guess, 80% ish. So fairly underpenetrated market, and the retail household income for India per capita growth should take this number of 6 crore to about 60 crores in next 8 to 10 years is what I feel. So India is the only market globally which can have that sort of, I feel SBI AMC in next 10 years can be 10x from here. Just look at the base it has got and at the numbers they're coming in. So this should trade at those insane multiples. So this is a no-brainer. Vallabh. 30 times is deeply undervalued for this segment.
Got it. Although AMCs typically tend to make money, you're right? Like as AUM keeps increasing. So this is one of those defensible segments where in the long term you don't tend to go wrong. In the short term, you might buy something which is overvalued, but then time catches up and then you tend to end up making money per se. Uh, Question: how is it like ICICI is the fastest growing AMC according to my limited understanding? You did mention some breakup, right? But for like you said, पीछे में like if you look historically, this has grown at higher AUM. What is the growth projection like compared to ICICI? Because that is what the market will, in a way, look at it as a multiple, right?
Hmm.
And growth projection in terms of the whole AUM, not really the equity AUM as well. Compared to ICICI, how fast can it cut P?
Okay, so there are two things to this. Historically, the PAT growth for ICICI Prudential Mutual Fund has been around the 28% mark, which has been 30% for last 2 years, 29.5% precisely. This guy has grown at 32% between the last 2 years and around a 34% historically, which is actually the PAT growth is higher for SBI mutual funds historically. Now, in what good thing ICICI Prudential has got is the active mutual fund AUM, which is what the highest yielding segment is. That segment for ICICI is actually very large portion of their whole combined all gross sort of an AUM, which is a very small segment. I feel 6 lakh 30,000 divided by 30 is around a 21% for SBI, which is there around 2 times of it or more than 2 times. So if you just look at the estimates of AUM growing there, and here is actually pretty similar, and actually 0.5% more for SBI. because I feel 6 lakh crore should see should go up by 40% in FY 27, and around that 25-30% mark in FY 28, where ICS is expecting the whole equity AUM CAGR being at the 22% sort of a mark, which has been set by the management. So if I just blend this number for next 2 years, SBI should grow fairly fast than what ICS potential in terms of equity AUM they are concerned. It is concerned. There's a second point to it. There has been a government capping on that expense ratio. So like that management fee sort of a thing, which was exactly a month or 2 month before the ICICI potential IPO had came, which was around in October. That has actually helped SBI AMC, and they're saying हमारा कोई loss to actually we have gained, because that has brought some reforms on that fixed income and low yielding products, in which SBI acts as a leader. So I feel these are small 2-3 pointers which I feel should not take those P multiples below ICICI potential at all.
Got it. So you're saying that it should probably get a similar multiple to ICICI.
Similar or higher,
Oh wow.
nothing lower.
Got it. And in terms of like, we'll probably come back to subscription, but shareholder quota, do you want to clarify because it just came at the last minute, right? And how do you anticipate the anchor book to be? Shareholder quota also, what do you expect the subscription to be?
Shareholder quota, I feel if you apply those 14 lots, 13 lots, sorry, one should be a confirmed thing which I feel you should get. उतना ही मिलेगा, उससे ज़्यादा I don't anticipate, to be very honest. Talking on the anchor book, so there was a road show done in Mumbai, I guess yesterday or day before yesterday, if I'm not mistaken. There, the management has said that our anchor book was oversubscribed between 30 to 35 times, which I actually recall from some other merchant banking related sources. So the anchor book should be, I feel, the one of the niche at the best till date for all the IPOs we have ever seen. मतलब I feel Amundi has got a solid reputation in Europe, man. So I feel even those sort of an European investor should also look to grab the stock. So I feel anchor book should be extremely healthy, and it should receive insane sort of an subscription.
Got it. Understood. Yeah. And how do you expect? Have you done the calculations for BHNI,
And I
SHNI,
haven't
or
done that
whatever?
yet.
Yeah.
I feel retail should be around a 2.5 times mark. ठीक है, मतलब ढाई में से एक. शेयर होल्डर शुड बी वन, एक मिल जाएगा 13 लगाओगे तो मोस्ट प्रोबेबली. एंड बिग एच एन आई स्मॉल एच एन आई गेट टू सी. Give me 2 minutes, I'll look that too. Give me 2 minutes.
Yeah. I was seeing from what I was seeing, it was somewhere around 5 times BHNI and some 15 times SHNI. But yeah, that is what the expected is. Rohit, do you have an idea for what should be the expected number for Millworks? Because these two are clashing, right? And then there is a clash between
I've got estimates.
Laser and everybody tomorrow.
Small एच एन आई
Millworks,
शुड बी
yeah.
बिटवीन. ओके, मैं दोनों का दे दूंगा, ठीक है. मुल्क से आप अलग से दे, मैं अलग से देता हूँ. एसबीआई म्यूचुअल फंड रिटेल आई एंटिसिपेट बिटवीन 2.2 से लेके 2.5 टाइम्स. ठीक है. Small HN I expect 16 से लेके 18 times, and big HN I expect 4.5 times. 4.3 से 4.5 times. शेयर होल्डर शुड बी, हाँ, शेयर होल्डर में मिल जाएगा, एक से साथ थोड़ा ज्यादा ही मिलेगा, बट वन लॉट इज कंफर्म इफ यू अप्लाई 13. फॉर मिलवर्क्स, रिटेल शुड बी 150 times. Small HNI should be that 180, 190 times, and big HNI should be that around 120 times.
Yeah, I think it'll be more or less the same. ICICI, if I'm not mistaken, at that time the GMP was lower, and so subscription was a bit lesser than.
Correct. Correct.
I think SBI the GMP is a bit higher, so people will come chasing with avidly.
And I've seen your July month, historically has been delivering those top subscriptions. Matlab, I don't know what is the phenomena, but generally July IPOs in July month receive insanely higher subscription than the average subscription some other months.
But
So
one
anyone,
thing, this Kusumgar, like I was very surprised by Kusumgar. I was just seeing, I think BHNI was 3536X, which I think is some 1.2 lakh applications in BHNI for Kusumgar, which is a very high GMP IPO that just closed now.
Mhm.
I mean, if only that many come for SBI, it'll be much, much lower, it'll be 3x. So I don't know why like
No, there's
even
one
somewhere
more thing.
Kusumgar
Na
had such weak.
people are also looking to apply a laser, right? Matlab, there are a lot of people I know who have stopped their money flowing in, and also the subscription. They're saying मिलेगा ही नहीं तो
Maybe
क्यों लगाना is what the sentiment is for Kusamgar.
possible. Maybe waste because of the size.
Yeah, SBI should see a lot of
Yeah,
people
I mean
who have
I'm
stopped
expecting
applying
5x.
should start
There are a
applying.
lot of IPO players who have been in that hibernation mode should get active in SBI is what I feel.
Yeah, perfect with
Millworks दे
that.
दो यार.
क्या क्या है? क्या
Millworks
यार
दे
हैप्पी
दो.
वाई भी लगा लो कि हमको दे दो
SBI
थोड़ा
ले लो.
सब्सक्रिप्शन इधर.
Yeah, with that, we have towards the close of the space. If there are any questions, please post. SBA both clashing, Gift Nifty. No questions as such. But yeah, with that, we are towards the end of the space. Thank you so much, everyone, for joining. Have a happy IPO applying. There are quite a few IPOs, three clashing tomorrow, and then two clashing on Thursday. We will come back with next episode. In the meanwhile, if you haven't followed us on YouTube, please go ahead and do that. We'll also post this space where you can listen to all five IPOs, and then we'll also post YouTube interview of Millworks day after tomorrow. So make sure you subscribe to Sunday Investing on YouTube. Thank you so much, everyone. Bye.
Thank you.